with you today, your own finance adda. So, it is indeed a volatile trading day for the share markets in India. On 13 March, we saw that even the market paused for 45 minutes when Sensex and Nifty hit their lower circuit. Also, if anyone who wants to check the meaning of what lower circuits are, it is given in the channel description box. Feel free to check. Now, the last time that this happened, when Nifty and Sensex touched their lower circuit, that was 12 years ago, guys. Now, during the time when the market is down, it can be today, it can be tomorrow, it can be in the near future. Our aim is to invest in the stocks that we wanted to buy always, but were not able to buy because they were way out of our budgets. So, if a stock is down and if you got any extra cash lying with you, then it's the best for you guys to invest. How this works is, if like let's say that if I have rupees 500 with me, guys, okay, now I can invest this 500 in some stock, let's say A, and the price of A was, let's say, 100 rupees per stock. Now if this is the case, what will happen is I will get 5 shares of company A. I will get 5 shares of company A. This is a very simple math. Now if the price goes down, if the stock market goes down and the value of company A share goes to rupees 50, I can now buy 10 shares. I can now buy 10 shares easily, guys. Now what this tells us is that basically company A share are so called on sale, guys. Now when I see a sale sign and if I want a product, it generally, I tend to go inside and buy the product. And that's what the general consensus is among every individual in this country or in whichever part of the world you are, unless you are Ambani. That's a different scenario. But if you see a on sale sign, of course, and if you want to buy the product, then of course you go in the market, you go inside the shop and you buy the product. So that is something that we need to know. Of course, there won't be any sign in the stock market saying that the stock is on sale, but we know for a fact that now the stock that we want that was at $100 is now at $50. That clearly shows that it is on sale, even though there is no direct mention or anything. It also helps us in understanding the concept of dividend. Let's say, okay, so let's take the above example only, which says that the company A was at rupees 100 per share, and I had 500 rupees with me, out of which I was able to buy 5 shares. Now let's say these 5 shares, wait a second. Now let's say these 5 shares offer me a dividend yield of 5%. They offer me a dividend yield. Now guys, one thing that one needs to understand is a company pays a dividend when it makes profit. So even if the price goes down from 100 to $50, the company is still going to function, and in the near quarter, when they reveal the data, if they have earned profit, they would give you the dividend. So in the first scenario, I had 5 shares, but now I have 10 shares. That means that now I will get twice more dividend. So now I have 10 more shares with me, resulting me in getting a 10% dividend on them. As you can see, it clearly doubles my dividend. So what I'm trying to say here is that as time progresses and as you see that the price of the product or the price of the stocks that you always wanted to purchase go down, then you need to buy them. Because in the end, if we are not traders, guys, if we are not traders and we are investors in the market, and if we are investors, then our aim is to invest in the market. And one who feels like they want to invest in the market for a long time, let's say for 5 years, 10 years. Now most of the people, they'll go for the mutual fund, but again, if you guys want to get rid of the management fee, advertisement fee and various kind of fees, and you guys want to earn more money, then you can simply invest in the stock market as well, directly, not through a mutual fund. So if you guys do that, then if you guys want to enter for a 5 to 10 years period, then you need to enter into the market when there is a crash or when there is a dip in the financial market. Okay, whenever there is a dip in the financial market, that's the time when you need to enter into the market. Because our aim as an investor is to buy low and sell high, guys. That's our ultimate aim. That's our ultimate aim as an investor. So it can be in the 5 years period, it can be in the 10 years period. But what makes this interesting is that we are in this for the long term approach, guys. We are not in this for the short term approach. This is a very simple concept. Now I'm not going to tell you which stock to buy, but this is like the right time if you feel, since the market is going down, various kind of issues had happened with Yes Bank and the coronavirus affecting the import and export of various countries and various firms as well. So this seems like a right time if you guys want to invest and earn the profit from it, not in the recent time but 5 to 10 years now from now. Like I said previously as well, the market can crash today, tomorrow, or in the near future. You have no idea. Just keep in check when it is going to fall. On 13 March, the market did fail, but one needs to also understand the fact that after a gap of 45 minutes when the trading started, the market was able to recover itself. So that also happens. So imagine a scenario where a person would have invested in the market when the market went down, and when the market recovered itself, that is the market value increased. At that time, most of the stock prices must have also increased. Let's see that RBL Bank on 13 March went to 184 rupees, and as again the market recovered, it closed at 206. Now that you can see is a profit of straight away 22 rupees, guys. Now this is a very important concept if one is able to grasp this. So now if you guys have just found the channel, then I am Siddhant and I work with Tutored and I make a lot of videos on different topics of finance that add more to your life and your finances as well. So if you find any kind of interest in these kind of videos, then feel free to subscribe for such content, guys. Thanks for watching the video.